Good afternoon and welcome to HYCM's online trading workshop with myself, Giles Cochran, Chief Currency Analyst here at HYCM. Thank you very much all for joining me. I look forward to taking us ahead for the next coming half an hour or 45 minutes or so as we're looking at the latest market events, and we'll be looking at applying practically some of the skills that we learn in fundamental trading. Now, one of the key things to make clear before we start this,
just for the China watchers, be aware the PBOC has just issued a Q4 monetary policy implementation report. We will keep in.
My apologies, I occasionally forget to turn the squawk off. It is now off, so that gentleman will not be interrupting us again. Apologies for that. Just to make it clear, as folks are coming in, just going to have a look at who we got. Oh, hi, Tribuvan Van, good to have you guys here. Preben Keenan, Jim, I think this might be your first time. Hamad, well, a very special welcome to you if this is your first time, and a special welcome to the regulars. I'll just go through roughly what we're going to do. Before we do this, is just making clear that even though we'll be talking about entries, exits, etc., this is not trading advice. The whole idea of these workshops is you look over the shoulder of a professional trader, you see how I go about making my decisions, how I go about deciding which currency pair I want to trade, and then you see my thought process. And the idea is that informs you how to make better decisions for yourself. So just to make that clear, because we can't offer a signal trading service on this webinar, because what happens if market conditions change, etc. So instead, what we're trying to do in these webinars is teach you how to trade for yourself, how to make your own decisions, and what thinking process you need to adapt. A special topic we'll be looking at is the coronavirus risk, the danger to supply chains and global GDP. I'll just be explaining the recent risk-off tone that we had yesterday, and I'll also show you a couple of examples of how I took advantage of that change in sentiment. Handout for the session, you can find that in your GoToWebinar control panel, which is the terminal which has all the different arrows, sharing, dashboard, audio, webcam, questions, etc. One of those titles on the GoToWebinar control panel says handouts, should say 1 of 5, and there's a workshop handout. If you just open up that workshop handout, it will look like this. And this workshop handout is yours to keep and print off. And the whole idea is I designed this handout so that it be very practical. So you can print it out. It's just one size of A4. You put it by the side of your desk, and then you can use these 5 topics, these 5 headings, as a framework for making your trading decisions. So this is what I do every single day when I come to the market. I am always and habitually going through these events. I'm looking back, looking forward, looking at the charts, looking at a risk, and looking at the outcome of my trade. That's the way that I'm trading day in, day out. So that's the handout for the session. Any special topics you would like to talk about, just email me here at hycm, giles.cochran, hycm.com, and I'm really happy to go through any topics that you want me to look at. Don't forget, we will look at trade ideas that you have or are in at the end of the session. So if there's any trade ideas you've got and you would like me to comment on them, please do just let me know what trades you're looking at, and I can give you my opinion on them, which can be a very helpful thing. We're going to look at the special topic first, and I want to look at it slightly differently today. And for those of you who are regular, I'm going to take a slightly different approach, because I was speaking to one of our clients, and I was going through one of our clients' trades recently, just helping them on a one-to-one basis. And it suddenly struck me that actually, putting this into practice and how to understand the market from a fundamental perspective, it can take quite a lot of practice. And so I wanted to use this as a case study to really help our understanding and our growth. So the special topic today is coronavirus risk, the dangers of supply chains and global GDP. Now, if you look at yesterday, we saw a risk-off day in the markets. And we saw a classic risk-off day in the markets when we see falling equities, falling oil, gold up, yen and Swiss franc strength, and Australian dollar, Canadian dollar, New Zealand dollar weakness. For those of you just joining this webinar for the first time, this is a topic that we go over again and again, how to recognize risk-off and risk-on environments. And this was a classic environment. And for those of you who are following the risk sentiment, this will be very, very simple to recognize, essentially. What I want to share with you is that on the 18th of February, we had a sudden risk-off move. We saw a big fall in Asian equities. We saw a fall in European equities, and we saw a fall in US equities. And that falling in equities was because of Apple earnings projecting a earnings miss for the first quarter. So the way the market looked at that, the way this relates to the dangers of supply chains and global GDP, was that the market's thinking if the coronavirus risk gets worse and it hits supply chains, then there's going to be a wide fallout. And Apple was seen as obviously a large company, and if Apple's earnings are being hit by the coronavirus fallout, then this coronavirus risk could expand and get worse, and global GDP could fall. That's why we saw the strong sell in equities. We also see gold being bid. So looking at that as a whole, what we can see is that the market is concerned that if the coronavirus risk expands, supply chains will be hit. So that means many companies will have their products made in China, for instance. And if China has a coronavirus outbreak, then Chinese factories will be closed. And if factories are closed, then the products that are made on the components that are made in China won't be able to be exported out to their necessary destinations. Hence, global GDP will be hit. That's why we saw that risk-off day yesterday. So just to get in your mind, if we see evidence that the coronavirus is getting worse, we're going to see more risk-off days. But at the moment, today, the market is on a risk-on day. It's kind of said, okay, there may be a blip for the first quarter, but we're basically expecting the coronavirus outbreak to be controlled and managed. So just to keep that in your mind, ongoing for the next few days, next couple of weeks in particular, when it looks like the coronavirus is getting worse, then we're going to see risk-off days. When it's getting better, we're going to see risk-on days. So just to be aware of that atmosphere, of that kind of sentiment that's in the market. Now, the reason I wanted to look at this topic via some trades is that this was the trades of a client yesterday. You can see, look, 18th of Feb. Now, the 18th of February was this very classic risk-off day. Now, just using in your question panel, if the market was on a risk-off day, and if we knew that we're going to see, that we expect to see a classic risk-off reaction, which we did, what kind of currency pairs would you be looking at trading? Just write it in the question panel. See, the gentleman here, the client of HYCM, was trading pound US dollar, euro US dollar CAD, silver. What currency pairs do you think would have been most helpful to be trading in a risk-off environment like we had yesterday? So let me know in the question panel, type in which currency pair and whether you'll be buying or selling. It'd be helpful for me to know how much of this is going in. Thank you, Tribavan. Yeah, first thing in the morning, that was a currency pair I was looking at buying. I changed in the afternoon. I'll comment to that. Yes, EFAM. Very good. Well done, Tribavan. Well done, EFAM. That's really good to see that, guys. I'll give folks another minute or so just to write in your answer. Yeah, Trib, you're on the money. Yeah. Okay, we've had some answers in. I'm going to share these. The answers we've had are very good. So we had US dollar, Canadian dollar buy. Now that was one of the only trades that my client that made sense yesterday, because the US dollar was supported on really good New York Fed manufacturing data. and the dollar index have been rising higher, has been all week. The Canadian dollar is weak. Now, the reason the Canadian dollar is weak is because oil was weak yesterday. And the weakening in oil is what you'd expect in a risk-off environment was going to result in CAD weakness. So US dollar, Canadian dollar longs would make sense. Another suggest that was from Chibuvan. Thank you, Chibuvan. EFAM, we had Australian dollar, Japanese yen short. Yes, that was a trade I looked at taking yesterday. That makes sense because in a risk-off environment, we'd expect yen strength and Australian dollar weakness. So Australian dollar, Japanese yen sellers makes sense. Similarly, CAD, Swiss franc selling makes sense, EFAM. Gold tends to be bid on geopolitical concerns. So Chibuvan mentioned gold up. Now, gold up yesterday made a lot of sense. We not only had a risk-off tone, we also had the US having, President Trump's having an argument with a big oil producer, I think Rosneft, and that was putting pressure on gold to the upside as well. So well done, those of you who mentioned and got that right. Now, you see that the classic currency pairs that we should have been trading yesterday, and if you just joined me, don't worry, we will get on to today, but this is just a good learning point, was Australian dollar shorts. That would make sense. CAD shorts, US dollar CAD longs, oil shorts, gold longs, equity shorts. You see, now do you see, look at the difference between the client's trades and the trades that we've highlighted that would have made the most sense. Now, my client, to be fair to him, is wrestling, trying to really grip with the fundamental understanding of the market. But what's happening is this particular client is getting stuck on technicals. Like he was saying to me, there was a really good technical divergence on a very low time frame chart for selling the pound yesterday. Well, it made sense to buy the pound yesterday because there was news that the March 11 budget was going ahead. So he was doing the exact opposite of what the market should be doing, and also the US dollar was going to be strong yesterday as well. So it's a mixed bag. There's strength in both of those currencies. We want to get one strong, one weak. So the pound didn't really make sense yesterday, not pound US dollar anyway. So notice how if these trades were in my client's records yesterday, then what you would have seen is you would have seen better results. Okay. Now the best result he had of the day was his US dollar CAD position. So he had about a very small 8-point profit, but he was in the right direction. That was sentiment-wise, that's what we'd expect US dollar, Canadian dollar longs, specifically in the first half of the day. Okay. So just to go through that, so I'm a trader and I trade. So yesterday I took some trades, and here's the first trade I took in the morning was oil short. Look, I knew that we were in a classic risk-off environment, so we're expecting falling oil. So notice how from the time I shorted, just when I get to my desk, nearly the whole day oil was sold yesterday. And that wasn't a surprise for those who understand market fundamentals. And notice that the way to trade this was simply to open at market. So it's simply selling at market and riding it down. This, you can't see on this chart, was a support level that was where I expected to find some resistance. So I took profit at the support level. Now in the afternoon, again, Australian dollar weakness, Japanese yen strength. You can see that was the reason Australian dollar, Japanese yen pair was falling. Australian dollar is very closely linked to China's economy, so there's a double reason for selling. not only risk-off moves, but also the close connection to China and yen strength. So when I came to my desk, I didn't want to be selling down at these lows. I wanted to wait for a retracement, waited for a retracement, and price, ultimately my target was down here, 73.25 region, and price moved up to this level towards the end of the European session. It's about 5 or 6 o'clock London time, and I realized that the session was coming to an end. I didn't want to wait for another session. So was this news fresh? Yes. Was it significant? Yes. But by the time we got back through to the Asian session again, it's old news. And sure enough, we're now in a risk-on market. And you can see, look, this is some of the risk-on sentiment coming into the Australian dollar, Japanese yen. So there, closed my position, intraday trading, and just took, you know, a few points profit. Okay. But I just wanted to show you, look, so Tribuvan, EFAM, you guys, you've got the idea. You've got the idea. You're seeing if the market is in a risk-off environment, we want to go with the classical risk-off moves. Don't make life more complicated than that has to be. So if you're in a risk-on market, we see the opposite. We see rising equities, rising oil, a gold down in a textbook classic risk-on, Japanese yen, Swiss franc weakness, and Australian dollar, Canadian dollar, New Zealand dollar strength. And that's, we're going to come on to it in a minute, but that's what we're starting to see now. Okay. So go with the most obvious, and then apply your technicals to the chart you're trading. So this oil chart, the way I traded this is I used a hidden bearish divergence on the RSI. Okay, that's nice and simple. And here I just used support and resistance levels. I was just selling from this resistance level here, about the 73.50, 73.60 zone. Okay, I'd highlighted that. That's where I was looking to sell. So turn to your handout. You should have your handout now. We'll now go through this process freshly for today. Okay, we'll go through it again. Just like I'm doing each day, we're now going to go through that. So first of all, what kind of mood is the market in? Well, it's in a risk-on mood. Okay, we can see, looking at the market, we can see that the European equities are in the green. Okay, we're up on the day. Now there is a slight anomaly today, is that bond yields are lower. So we've got bond yields lower and equity markets higher. So the market is a little bit undecided longer term about risk. So that just tells you usually these two would move in tandem. So if equities are up, you'd usually see bond yields up. So there's a mixed picture there, but the stronger equity move is what's leading the currency market today, right? So that's what we're getting. So in this risk-on market, what do we expect to see? We expect to see yen, Swiss franc, gold weakness on a typical risk-on market, Australian dollar, New Zealand dollar, Canadian dollar strength. So we're seeing yen and Swiss franc weakness in the session. We're also seeing Australian dollar, New Zealand dollar, Canadian dollar strength. Okay, so we're in a pretty much classical risk-on market now. Gold, let's just take a look at gold to see where it is at the moment. Just call up the gold chart. Gold's been moving up on geopolitical concerns, you see. Some of the concerns with gold have been that the US and Rosneft, this company, is going to fall out over a large oil production issue. So this has been impacting gold. So we're still seeing bids in gold, but just to remember that we've got some key pivot point overhead. So I'm expecting to find some profit takers here at this 1624, this 1625 level. Okay, so just to be aware of that for gold buyers. So gold markets are still being bid at the present, and that is largely because of geopolitical concerns and risks linked to this individual company. So just to be aware of that, it's a slightly mixed picture. Right. So we now look back. Remember, the first thing we want to do when we're looking at the markets is to look back. So we've looked back, we've seen, okay, coming to my desk, Nikkei's up, Hang Seng's up, Shanghai is a little bit down. So broadly, Asia, S&P 200 up. So broadly, Asia was up. This is when I came to my desk first thing this morning. Right. So equity markets are up. We're seeing broad risk on moves with the exception of gold. We're seeing yen, Swiss franc weakness, Australian, New Zealand dollar, Canadian dollar strength. That's what we'd expect. Now look back, we had a comment from RBNZ Governor Orr. And RBNZ Governor said the New Zealand dollar was supported on comments from RBNZ Governor Orr, who stated that the New Zealand economy and RBNZ monetary policy are in a good place. Right, so we've now got two reasons for New Zealand dollar strength. We've got strength because it's a risk on market, and we've got strength because of positive comment from RBNZ. So now, what sort of currency pairs would you be looking at trading given this information? So if you look back, you're seeing markets in a risk on mood, Asian equity markets are up, the European cash open, we're up. We're also seeing risk on markets generally. What currency pair would you look to trade? Tell me which currency pairs you'd be looking to trade. Just type it in the question panel. This is where I put you through your paces, you see. I can't be the one doing all the work, so you guys got to do some of the work as well. Which currency pair? Put it in the question or the chat panel. You look back at the market, you see we're in a risk on mood. We've seen a classical risk on market apart from gold. So we see yen weakness, Swiss franc weakness, Australian dollar, New Zealand dollar, CAD strength. We've also seen some upticks in oil. Okay, there's a little clue. Oil was being bought on supply issues because there's a problem in Libya, and eastern seaports have been closed, and there's been a disagreement, and there's less likelihood of peace happening. So oil prices have been supported this morning on this Libyan development. So we would expect CAD strength. Okay, yeah. Well done, Tribuvan. That was the currency pair I was looking at this morning. And Raider, yes, we look at Australian dollar, and we always pair it with a currency. So something like Australian dollar, Japanese yen, that would make sense. Maybe CAD, Canadian dollar, Japanese yen. So either of those two, we would have looked at it and we would have said, look, looking at the sentiment, what do we see? We see a weak yen. We see a strong New Zealand dollar. In which case, we want to see New Zealand dollar, Japanese yen longs. Okay, similarly, we were also expecting to see a strong CAD because of oil disruption in Libya, which has been supporting oil prices. Let me just show you. Let's get rid of that. Go to the 15-minute chart. You can see oil prices have been supported overnight. So we're looking at New Zealand dollar, Japanese yen longs, and CAD, Japanese yen longs. So then coming to my desk, okay, you're going to ask, is this sentiment fresh? Is it significant? Well, yes, it is. So New Zealand dollar, Japanese yen. Looking back this morning, we were down just around this kind of level here. Where were we? Okay, so this is saying 10 o'clock now, but this isn't helpful because it's now nearly 1 o'clock my time. So when I came to my desk this morning, around 6:30, 7:30 time, 8 o'clock, New Zealand dollar, Japanese yen pair was here. So you can see we've moved up almost 30 points. Okay. So place to enter would have been here or here. I'd expect to find buyers. So at this level, you see that little support level? Just make it nice and simple. You've got resistance, turn support here. you've got resistance, resistance, turn support. So I was looking for buyers from here, here, or even down here. Okay, New Zealand, Japanese yen. There's no need to make it complicated. You can use your own technical system, or simply just use support and resistance. So look at support and resistance levels where you're expecting to see major moves. Then we look at CAD, Japanese yen. Right, we see, look how far the CAD yen pairs move. Now, when I came to this pair, it was around up here, okay, which is the top of the average directional range for the day. So when the price was there, I didn't want to just buy at market. So again, I was looking for longs from this level here, from the 83 big round number. But you can see, look, prices move sort of 40, 50, 60 points, okay? Now that's not always going to happen, but you see, when you correctly identify sentiment, you find yourself on the right side of the trade more often than not. So now let's go through to what happened in the European session. We had a risk event, CPI data out for the UK. Right, the headline inflation data was 1.8% versus 1.6% year-on-year expected, a beat and a good beat, and the core number was up as well. So inflation data is very important, and this inflation data means that the Bank of England, you know, they're less likely to need to cut interest rates. So this increases the chances of an interest rate hike as opposed to an interest rate cut. So that is bullish for the pound. Remember, inflation data, the only way you can control inflation is through raising interest rates. And if inflation gets, you know, around 2 to 3%, the central bank has to step in and raise interest rates. So as inflation goes higher, that means interest rates are more likely to rise, which means the country's currency increases in value. So this data means bullish news for the pound. So we know some things. Are we in a risk on market? Yes. I'll show you. I'll show you now. I'm just going to take a screenshot of the stocks, right? And we can see we're in a bit more of a risk on market, because look, we have got European equities up, still up. Asia was obviously up, and that's closed now. S&P 500 futures are up 0.23%. We've got the Dow and the S&P 500 and the Nasdaq don't open till 2:30 London time. So that's pre-market open. So you look at the future market. S&P 500 futures tells you, look, the S&P 500 is likely to open to gap up, okay? Because you've got the future market there, plus 2-3%. Look, Treasury yields are now up. Remember, I said in the risk-on environment, you'd normally see the yields matching the stocks. That is the case. That's what we're seeing. So are we in a risk-on market? Yes. So we'd expect yen or Swiss franc weakness. So what currency pair might we be looking for this afternoon? What currency pair? Given the fact this is fresh, we're always looking for the freshest news, the most up-to-date, the market craves freshness like you wouldn't believe. It wants the newest. So this is new. Pound strength. So we know we've got pound strength. Which currency pair will we look to trade, do you think, this afternoon? I'll give you a moment. What do you think? Yes, Trib. Yeah, you got it. That's exactly. So this is the currency pair that I'm looking to trade for the American session. It's strong pound, weak yen. Do you see how it makes sense? Just pound New Zealand dollar. I'm not sure about the New Zealand dollar, EFAM, because there's some strength in the New Zealand dollar on a Governor Orr's comments. And the thing with the New Zealand dollar, it's a commodity currency. So you'd expect to see New Zealand dollar strength. So I would prefer pound yen over pound New Zealand dollar. So let's look at the chart. So here's pound yen. And now we look where potentially will we expect to find buyers. Okay, so right, so we can see the price is moving up, got some strength here. Where are we going to expect to find buyers? Let's have a look. So just using simple support and resistance, we can see here the 143.40 level. So that would be a prime place we'll expect to find buyers. 143.40, you've got resistance here, here, here. Expect that resistance to turn into support. So 143.40, and if it gets further down, 143.20. I'd expect to find buyers at both of these levels. Okay. Just looking on the daily chart, you can see that the pair's trying to break out of those highs. Okay, and we've got a inside bar, false break of an inside bar, and target for the day will be up at these highs, looking at the one just underneath the 144.40 level. Okay, the 144.40 level here. So that's potentially what I'd expect for the day. Now, obviously, this is not trading advice. Remember that. What this is showing you how you go about making trading decisions, how I go about making trading decisions. So if you're not in, then there's no point buying at the highs. Instead, buying at a slight pullback at this 143.40 level. That's potentially what I expect to find buyers. Again, 143.20 stops just underneath here, 142.70. Now, what would change the outlook for this trade? Well, what would change the outlooks for this trade? Tell me in the comments. Tell me, what would make this trade no longer valid? What kind of news would you expect to see to invalidate it? I'm gonna help you. I don't want to make this too hard. Now, what would invalidate it is, say there was more risk off tone came into the market. There was a big announcement that earnings have been missed for another big company, or coronavirus is spreading. Then you'd see yen strength. And when you see yen strength, you see pound yen weakness, and it would just fall like this. Okay, that would invalidate the trade. Likewise, if there was news that the the budget for the 11th of March is going to be cancelled, it's not going to be held in March, it might be held in April, then that would see the pound fall. Okay, and that would be negative for the outlook of the trade. So this every trade outlook has a risk to it. So the risk for this is that we go to a risk-off market, which will see yen strength, and it would fall. So the key is to understanding if the price does fall down here, you got to look to yourself, why is it fallen down there? Has it fallen down there because risk has changed? Then in which case, don't enter. But has it fallen down there and you can't see any reason why it's fallen down there? Then that's still good for an entrance. Okay, so that is how you go about choosing which currency pair to trade, and you use exactly the same principle for whichever currency you're trading. Okay, whichever one you're trading, you look exactly the same. Okay, now let's look next at what trades are you looking at? Yeah, Efam, sorry, just going back quickly. Correct. Radar, correct. Well done, both of you. Okay, pound US dollar. Let's have a look at pound US dollar. Now, are you buying or selling, Efam? Okay, buying. Now, the problem you've got in the US dollar here is the Dixie. If you look at the dollar index, what do you notice? It's going up, okay? And the reason the dollar index is going up is we had some very good New York manufacturing data yesterday, which has been supporting for the US dollar. So that means you've now chosen a currency pair that has two strong currencies. You've got pound strength and you've got US dollar strength. That's why we're seeing this kind of, you see this ranging kind of motion, because we've got two strong currencies backing it out for each other. So my opinion on this is that if you want to trade the pound yen is the way to trade the pound, not the pound US dollar. I assume this is an intraday trade, so that's for today. That's my views on pound US dollar. Any other trades that you guys are looking at? Let's just. Okay. Okay, Swiss franc, Japanese yen selling. Now, the problem with this is that you've got two safe haven currencies. So you've got the Swiss franc and the Japanese yen. And at the moment, you've got the Swiss franc gaining a lot of strength from the Japanese yen. So I'm not sure what the reasons are for that. But what I do know is they're both safe haven currencies, Van. So if I was looking to trade a safe haven currency, I would look at something like the pound yen to do it, or even the pound Swiss would make more sense than than Swiss franc, Japanese yen. Van, what reasons did you have for selling this pair? Just type in the chat what reasons you had. I'm not 100% up on that pair, but I know they're two safe haven currencies. Euro dollar. Okay, euro dollar. Are you buyer or seller, Raider? The euro dollar is in a solid downtrend, has been for a while, and that solid downtrend you can see is very, very pronounced. Okay, so if you're in the euro US dollar, you don't want to be a buyer on the euro US dollar. It's a seller's market, right? And that's because the euro is weak and the US dollar is strong. Okay, we've had German Zew's economic sentiment was very poor out yesterday, and the US dollar is strong, as we've already covered. Buying gold, EFAM. Yeah, buying gold makes sense on the risk, geopolitical risk, but just to be aware of that level I highlighted above on gold. Look out for profit takers at that level, that resistance level 1621. Okay, so be very careful of that. US dollar, Swiss franc. Okay, US dollar, Swiss franc longs make sense, Salvatore. Okay, you can see that it's been moving up into that 200 exponential moving average. So you can see that that move to the upside has been taking place. So US dollar, Swiss franc makes sense as long as the risk tone remains. Okay. Okay, guys. Okay, guys, that's that is covered everything that we have for today. Don't forget we got FOMC minutes out later. So thank you very much for the session. I hope you have a really good afternoon, and I hope to catch hold of you shortly. Thank you now, guys. Bye.